example to recommend the guys who've been actually fueling the demand now, and the fact that there are very, very few marquee assets, and one sees that whenever they're up for grabs, so there are now multiple players looking at that. How do you see this from a fund perspective? What's driving the sudden kind of increase in terms of interest, and also the fact that the appetite to consume or let's say get into the space is just getting bigger.
So I think primarily the reason why there's a lot of interest in this space from FDI is the fact that for a long period of time this sector has been in distress. And when I say distress, while I think there was demand, the fact that the leverage and the longer gestation period probably the kind of benchmark rental that the IT/ITES sector, which is the bread and butter of commercial real estate, can offer. Now the rentals in this space has increased because the rupee has weakened. About a year and a half back, spaces which are going at 60 are now going at 70, and that's primarily because over the last one and a half years, that's how the dollar has moved. We have seen in a lot of companies when we do now that we have become developers ourselves and we kind of try to lease up space, is that there's a definite strong threshold beyond which it's very difficult to push the rentals up. So effectively, I think the way the investors will have to create value is doing innovative deal structuring, which and lock in themselves at valuations which are attractive and take risks in terms of construction and delivery. It's only when that you can create value on a long-term basis.
Sure. Rajesh, if I get you on this, okay. So Rajesh, if we look at the perspective that you've dealt with a number of companies, when they were looking out for good quality commercial spaces, and as a developer, you've looked at them as well. So what are the few things that you think would make a commercial proposition much more attractive, for a tenant, if one tenant was supposed to lease out a large space? So what were the couple of things which a developer should do to see that they are in that race ahead of others?
The best thing one of the few things that the developers should do would be not sell it as a small unit wise. If you'll see why people or the tenant, they first started from Connaught Place and then they moved to Gurgaon, because Gurgaon, the very first project of Gurgaon was DLF Corporate Park. That was on the MG Road, and it was a single ownership. So the tenant feels more secure. In Connaught Place, earlier in historical buildings like Kanchenjunga, Akashdeep, Vandana, Tolstoy House, there were units of 500 square feet. So one lessee who wants to take about 15,000 square feet has to have a lease with about 20 people. So, the developers should not to sell fraction wise. Like DLF does not do that, they don't do it. They don't do it. But there are developers, they sell it in 500 square feet. So that is one thing that if they can avoid. Secondly is the parking issue. If the developers could provide some extra basement for the parking, that will also be very beneficial for the lessees. And the third is the maintenance. What they do, they charge maintenance, but they don't deliver it according to the money that they charge. So these are the three areas if developers can provide to the tenant, it will go a very long way.
Anil, if I can bring you on this in terms of, what would be your thoughts in terms of how can a developer get best results, from an IT project, if we were to looking at a return point of view? So how do you get the best returns from an IT project?
Yeah, I think the best part is where you locate your IT park. That is the first and most important thing. Avoid the metros. go into 3-tier, 4-tier cities. Try and create your own infrastructure with whatever you can afford to, and wait for the correct time to come. Especially in areas where you find a lot of institutions, universities, where youngsters, qualified youngsters are available. I did this on my own, and I succeeded. And everything supersedes, like the maintenance is very low, the rents are low, and your capital investment is low. So you always get a better chance to get a better improvement on the capital invested. You have to identify tier 3 or tier 4 cities where no one has ever gone. I did this and I'm quite successful at it. I get a return of 24 to 30% at times on rent, because you had a vision to work on it much ahead of anybody else, and you don't have competition. So that's one of the basic things. Identify, location, which city, which town you want to enter. That will help a lot.
Sure. Mukesh, if I can get you on this in terms of how do you look at the commercial investment versus residential investment there? So from a buyer perspective, why do you think a buyer should look at commercial as a more lucrative option for him?
Hello. Bansal, it's a beautiful question. Investors are always interested in a return which has a more level of security and a high level of returns. In India, the trend particularly, the residential segment always gives a very low yield as compared to the commercial one. At point of time, the commercial yield in the office premises, particularly in the megapolis city, it was 16 to 17%, which has now recently come down gradually to 6 to 7%. 6 to 7% return year on year is also not a bad return on investment, especially when the money or investments are blocked in a real estate. Real estate is an asset. It is more better, or far better rather, than the stock or a gold. So I personally feel that from the investor's perspective, the commercial has a better yield than the residential. Secondly, what I have personally felt, that what we are talking about the affordable housing all the time, then why we are not talking about affordable commercial? See, if Pradhan Mantri Awas Yojana, even the Prime Minister mission for housing for all, then why not we are thinking of affordable commercial spaces? Commercial affordable spaces at one point of time in the megapolis, it was as peak as touching to maybe the price of New York or Tokyo, or maybe of Osaka in Japan, or maybe anywhere in the world. So now, since last 5 years, the prices have been stabilized. But when we are looking for India's growth in terms of skill, in terms of infrastructure, then why would not we can create? Recently, Modi government has announced that 360 cities to be developed, smart cities to be developed. These all smart cities needs always a good commercial space, and that can be provided by a good developer. Now today, if you look at the concentration of the office space is only in the megapolis cities. But if you see the talent is spread far across and all over the country. This talent, instead of migrating from one place to another, costing at the risk of family, education, and other issues, why not we can create a center there and there itself? So it would be more affordable, and once it becomes affordable, it will be more lucrative for the entrepreneurs and for the new startup business, and even for the IT park business, even for banking and services business, even for services and beyond this e-commerce business. So if you look at that, smart investment would be where the prices are low, risk is low. So if you look at the three components of the construction industry today, the land price is the major component. So if you go beyond this metro or megapolis city, then the land price would be minimal. So question of risk is always minimized. Secondly, the cost of construction is more or less, you can afford to whatever kind of technology or whatever kind of resources that you deploy. And the profit margin can be affordable even in the lower segment. But if you go where the prices are higher, the risk is also higher. Because the tenant used to migrate many of the times because of they are touching and hitting the bottom line of their business. So even in these places where we can see the Mumbai area itself, where the company, German company, the top 500 noble companies have shifted from BKC to Andheri Kulla Road. Some people have Andheri Kulla Road to Ghodbandar Road. Why? The reason is only one, that they are touching and hitting the hard and the bottom line, and they are unable to manage the business. So investors from that perspective must look at that why can't we invest at the places where the land cost is low, create infrastructure, take the government support, and build the industry for the larger interest.
So Prashant, if I can get you, on this in terms of, the Mukesh spoke about the interesting aspect of an affordable commercial space. So just continuing with the point on the investor interest, so how do you build a stronger interest and how do you get in, smaller investors who also partake in the commercial space?
Yeah, I think it's very interesting what he just said. In fact, there's too much emphasis on affordable housing. It should be looked at affordable real estate, not just affordable housing. Like we have SEZs. Why can't we create something like a AREZ, affordable real estate zone, where if you have the land, you can build affordable housing and get certain, and not only housing, but offices, schools, etc., and get some kind of benefits, some kind of either tax benefit or subsidies, because you have to give some form of incentive for this huge vision to become a reality. And coming to what he was saying regarding the investors, one great avenue where a small investor can also be involved in commercial real estate is through REITs. Like instead of like a small investor can invest in stocks of companies and still have a ownership. Now, with REITs, you can invest in the unit of the REIT and actually become part owner of a commercial project without actually investing a lot of money. So you are benefiting from the capital appreciation and the rental, and at the same time, it opens a huge avenue to potential investors and therefore potential capital generation.
That brings me to the last question, and I think an interesting point as well. That we've been talking about REITs, for quite a long time, and there've been regulation changes happening, and the government's been serious about it. RBI has done its own bit as well. Tax authorities have also done, some movement around it. So my question would be to Amit and Shantanu both in terms of, that as a developer investor, REIT and other options are very much required to be able to monetize, those assets around it. What are the couple of things that you think are still remaining to be done by the government, wherein we would see the first REIT coming out in the country?
Sure. See, one is if you just connect the dots, the conventional way of strata investment in commercial real estate is already suggested is not the best option because it does not meet the end user requirement, where the large multinational tenants want consolidated spaces. What individual retail investors were conventionally owning 1,000 square feet or 1,500 square feet and multiple of those pieces. So it was not meeting the requirement. It would never clear the due diligence. More importantly, whenever the building has to go for a revamp. For example, it's very basic that every building, office building, every 10 years needs a revamp at the AHU level. It needs an elevator change every 20 years. It needs a basic like a filter change of a AHU every 5 years. Now, if this is not done, even if the first time the tenancy was there, it will not have a repeat tenancy. So which means there will be huge vacancies in the buildings which cannot keep up to the life cycle of the building. So there is a complete gap between the demand and the product delivery point of view. Now the opportunity is big. I mean, the 500 million square feet on an average, you know, on one side, I think it creates an employment, even if you take a thumb rule of about 10,000, you know, employment, direct employment per million square feet, which effectively means about 5 million square feet, for 5 million people of direct employment, another 15 million square feet of indirect employment. So on one side, there's a huge employment opportunity, which the commercial real estate is kind of generating. The second is it's generating a huge rental revenue. So even if you take you know, a thumb rule, you know, I would tend to believe 500 million square feet across India is generating a rental revenue in the range of 30,000 to 35,000 crores per annum. So that's the value dividend in the format of rental revenue which is coming. Now,
sustainable annual revenue.
Which is exactly, and this is annuity business, so that's the kind of revenue which is generating. Now, commercial real estate always needs an exit option because, as rightly said, that the gestation periods are so long. So a developer who keep on investing in the assets and wait for 7 to 8% return, you know, will not be very viable. So on the developer side, there is an exit option which is needed. The retailer investor always wanted to invest in commercial real estate, but now going forward from a conventional unit of those 1,000 or 2,000 square feet, I think the market has to graduate the way it happens internationally. So it will be a unit holder in a larger asset which need not be a square footage holder. And I think the REITs provide that model of institutional platform where it connects the demand and supply. And also from the point of view of the FDI, now, you know, 12 to 13% of the annual FDI from last 3 to 4 years is coming in the real estate sector. Now, REITs is a platform which is built to invite that FDI. Now, the independent, standalone commercial buildings will not be able to attract that investment. So in true sense, REITs is the most lucrative platform which gives confidence to the international market. It creates good balance between demand and supply, and it links with the whole story of the asset management and rather value creation. I mean, today there are buildings after 20 years who completely needs a complete revamp, not just at the base building level. I mean, sometimes the food courts have to be changed, the basements have to be changed, the whole access controls have to be redone. So only if the ownership is with the institutional platform or with very large developers, it will be able to address the needs of the changing user and the market. So if you connect the dots, I think that's the path going forward.
Excellent in that. Shantanu, would you like to just add to that?
I think REITs can be successful in India if commercial real estate moves away from a developer model to an asset management model. And I think that's very critical. That like a developer is only supposed to develop, right? And asset manager is supposed to manage that asset. If the day we arrive at that kind of a distinction, I think we will be able to create good REITs, because asset management
and the two have got very different objectives and very different setups as well.
Very different setup, very different set of perspectives. So and I rightly mentioned, our buildings age. And with that, the technology that is there in the buildings also age, whether it's AHUs, whether it's access controls, and so on and so forth. So it requires a constant upgradation. Now, the other thing is, I think the REIT regulation per se bit, the challenge is that, we are all accustomed to a sub 10 kind of a cap rate, right? I mean, that's the expectation from a developer. Now you pass that through various layers of expenditure, and what lands up in the hands of an investor would then be a dividend per unit yield of about 6.5% to 7%, which is the Singapore benchmark. Now, Singapore, it works because the interest rates there are lower, so there's a arbitrage between that and this thing. But in India, that's not the case. So I think in some way, the interest rates have to come down in order to make REITs more attractive.
Great in that.
Yeah. It was residential against commercial. Now, when you say commercial, we don't say actually commercial. Commercial is just a fraction of IT. So I am taking away commercial from the actual commercial, right? I'm just bringing in the IT. Now, that's where you can make calculations, because you were talking about retail and this thing and all that. How an IT can benefit much better for an individual investor and for the developer also. My personal experience says that suppose we put in 100 rupees and we get 10 rupees rent. So, but our 100 rupees is definitely appreciating in the last 3-4 years more than the residential. Anything between 5 to 10%. That takes care of the depreciation of the rupee. Now we have enhancement of rents. I do 10% every year. So we take care of the inflation, etc. Then we get the rent. So we are making somewhere around at least 15%. Average 8% is the devalue against the dollar for the last 30 years. 8% devalue. So we have to take that into consideration. And in residential, for the last 3-4 years, as everybody knows, we are all losing. Everybody loses money. And here, your capital is safe. You cover up the inflation, you cover up the loss of foreign currency, and you still make money.
So with that, it's a wrap on today's session as well as the proceedings for the day. I thank my fellow panelists for sparing their valuable time and coming and sharing their views around it. With the paucity of time, we couldn't actually take much benefit than what we would have otherwise. But still, I would say that that we got some good insights from them. So thank you once again, really, there, and thank you everyone. You've been a wonderful audience and a very patient audience as well, there. So thank you very much.